Investors, it is finally here. Robinhood, the IPO is close. You can almost smell it. But they've recently published the S1 filing, and I've been really buzzing to see how this company has performed. We already know from Coinbase's IPO and their recent filings how they had an explosive Q1 2021. So I do expect fireworks from Robinhood, especially with regards to Q1 2021, to see how they have performed. Now, I am interested in Robinhood as an investment long term, but depending on my impression of their financials, their income statement in particular, and also their balance sheet, will determine whether I'll be investing or not. I haven't invested in Coinbase because I didn't think that their business model would be sustainable, especially with regards to the amount they grew. I didn't think that growth would be sustainable. And I've got a funny feeling I'm going to have the same conclusion with regards to Robinhood. But yeah, before we dive into it, I'm just going to let you know I've had a quick flick through. It's filled. The thing is meaty. Okay, there's a lot of meat on this bone, and there's just so much to get into in one video. So I might make a part 2. But in this video, I want us to focus on the income statement, and we'll focus a little bit on the balance sheet. All right. So if you get any value from this video, please make sure you smash that like button. If you're new to the channel, hit the subscribe button and the notification bell to stay up to date with all of my latest videos. With that said, let's dive into it. Let's go. Take a look at this, right? So this is 2017, 2018, 2019 with each quarter and their growth. You know, they got the daily active users and their monthly active users. But look at what happened, right? So around Q1 2021, when the whole GameStop was going crazy, AMC was going crazy. I guess AMC is still going crazy now, but that was really the birth of the meme stock. Look at their active user growth. Insane. From Q4 2020 to Q1 2021, it is absolutely insane. Okay, so this is their income statement. All right, so their revenues is broken down into their transaction-based revenues, net interest revenues, and also other revenues, and then you have your total net revenues here. But look at the growth. Okay, in 2019 they reported a total net revenue of $277 million. Okay, and then fast forward a year later to 2020, it pretty much more than doubled. Total net revenues of $958 million as opposed to $277 million the prior year period. But look at them in the first 3 months, guys. First 3 months, total revenues was $522 million versus the prior year period, 2020, only $127 million. So this is absolutely insane growth, and this just goes to show how much of an impact the meme stock run had on Robinhood. I mean, they were banking and banking hard, but that's not the most shocking part. You would think with them doing so incredibly well with their total net revenues, I mean, you can see the bulk of their revenue was from transaction-based revenues. You might presume that this company is swimming in profits, right? Wrong. Look at their net losses, guys. So year-end 2019, they reported a net loss of $106.5 million, right? But by year-end 2020, they actually reported a net profit of $7 million. So this is very good. But look at Q1 of 2021 versus Q1 of 2020. They reported a net loss of $52 million, all right? But look at this Q1 2021. And this is what got me out of bed. When I saw this figure, $1.4 billion in net losses. Wow. Considering year-end 2020, they were profitable, $7.4 million. So what in the world went wrong? Okay, how the hell did they generate this amount of net losses in just a single quarter? And to figure that out, you have to look at their operating expenses. And as you can see, their brokerage and transactions pretty much doubled. Okay, so that doubled. But look at their technology and development. Okay, so they spent a lot of money on technology and development. In the first quarter of 2020, they only spent $33.2 million. But look at what they spent in the first quarter alone of Q1 2021, $119 million. Absolutely insane. Their operations also more than doubled. And then their marketing. So all of those free stocks that we saw from Robinhood, you know, sign up, you get 4 free stocks or 2 free stocks, whatever it was free for new users, of course. but that put a dent in their income statement. So in Q1 2020, they only spent $69 million, but look at their marketing expenses here, $102 million. There was a huge spike as well in general and administrative, so $34 million, right, in the Q1 of 2020. And look at this, Q1 2021, $137 million in just one quarter. Insane. That is ridiculous. And initially when I saw that, I thought maybe that's to do with stock-based compensation. And here is the culprit. So the increase was primarily due to an increase of $30.4 million in compensation and benefits, including share-based compensation. There we go. Share-based compensation, eh? I'm an investor in Palantir, so I know one or two things about share-based compensation. And allocated overhead for general and administrative personnel, and an increase of $23.5 million in professional fees to support the growth of our business. In addition, legal settlements. They had a lot of legal battles recently, and reserves increased by $42.2 million, as discussed in Note 13. To our unaudited, condensed, consolidated financial statements and elsewhere in this prospectus. So that's the culprit. So there you go. Stock-based compensation yet again. Here's a breakdown of their revenues. Okay, so their transaction-based revenues entails options, equities, cryptocurrencies, and other. The biggest changes, as you can see, is cryptocurrencies. I mean, it's been the year of cryptocurrencies. In Q1 of 2020, they only generated $4.2 million from their cryptocurrency side of the business. But fast forward to Q1 of 2021, that was up 1,967% to $87.5 million. Crazy. Absolutely crazy. And you've got here options as well. The options trading is also up 231%, and their equities trading is also up 322%. So this is a massive amount of activity from the users. But the main thing that really concerns me with regards to this revenue is this kind of growth sustainable? And I don't think so. We're already seeing a lot of people who are holding the bag. A lot of people are exiting investing in general. Cryptocurrencies, Bitcoin has lost half of its value. The euphoria surrounding Bitcoin and Ethereum seems to have faded, and now there's a lot more fear. Same with stocks. There's a lot of fear with stocks now. So with that in consideration, is their revenues predictable? I don't think so. It's very hard to predict. It's almost like Coinbase. I remember when I was looking at Coinbase's revenue, absolutely phenomenal revenue, massive growth. But again, the stock tanked because Bitcoin tanked. And I expect Coinbase's Q2 to be abysmal in comparison to Q1. So the same way I'm looking at Coinbase, I'm looking at Robinhood, I'm thinking, man, the cryptocurrency side of their revenue will be impacted by the loss of interest in cryptocurrencies at the moment. So I want us to take a quick look at their balance sheet. Like I said, there's so much to digest with this S1 filing, but let's take a look at their balance sheet. So cash and cash equivalents saw a beautiful rise. By the end of 2019, they're sitting on $644 million in cash, but by the year end 2020, they're sitting on 1.4 billion. So that's a solid amount of cash in their balance sheet. And if you look at their total current assets, that also grew, quite exponentially from $3.8 billion by the year end of 2019 to $10.8 billion. And their total assets, including property and restricted cash and non-current assets, total $10.9 billion. Now, how does their total current assets line up to their total current liabilities? And it's okay. So they're essentially sitting on $8.8 billion in terms of total current liabilities, and that's up from $3.1 billion in 2019. So their total current assets does cover their total current liabilities, which essentially means they'll have a current ratio that's above 1. So that means within the next 12 months, there's a low possibility of this company going bankrupt. And their total assets do cover their total liabilities. So that's 10.9 billion to 8.8 billion. Their stockholder deficit is also decreasing, which is good to see. You want to see that. It shows assets are growing much faster than the liabilities, which is very good. And with this brief observation, I would say they've got a decent balance sheet. But my main concern with potentially investing in a company like Robinhood is the predictability with regards to growth in their income statement. Is that top line going to grow as fast as it's growing right now? Absolutely not, in my opinion. I strongly believe we're going to see a decrease in growth. I mean, it's insane growth right now. And, a lot of people are leaving stocks, a lot of people are leaving crypto, and this is going to be detrimental to the business model of Robinhood. So this is my first impression with regards to Robinhood's recent filing. Let me know your thoughts in the comment section below. Remember, none of this is financial advice. I'm not a financial advisor, but I am excited by this filing. So thank you so much for watching, and I'll catch you in the next one. Peace.